Takaichi has finally been made the official prime minister of Japan, which means the Japanese money printers are probably going to get turned on pretty soon. Also, capital controls are coming to France. What does that mean for Bitcoin and crypto at large, and overall the world economy? And Kadena has crumbled and fallen, taken such a swift drop down, and it looks like it's a dead project. We're going to do a little autopsy on that. All this and more on today's program. I'm Cairo Copeland. This is Reinvent Ideal, and you're watching Shut the Fud Up. Welcome to the program, everybody, to a very special episode of Shut the Fud Up, because sometimes you just got to tell people that that's what they need to do. I saw a whole lot of stupid stuff on X today. I'm wondering, should I call it out? Should I start some drama? I don't know. Should I call somebody out by name? I feel like I have to, because
sometimes you just gotta.
Somebody's got to call these people out here. They're spreading all sorts of misinformation, and quite frankly, you might as well call it piss information. But we'll see. All right, so I see a whole bunch of people here in the chat. Tom is here, and so is Kent, Toblerus, and Roapsor. Welcome, guys. Oh, got a lot of stories to get into today, but let's start by looking at the things that we usually look at. Also, President Trump is due to make a important announcement at some point here. At 3 p.m. was when it was scheduled, which means it probably ain't going to get made till like 3:30 p.m. We'll check it out to see if it's anything important. I don't know if it is. I hope it's like something related to the trade deal. We'll see if it is. And if so, well, then we'll carry it here. I'll co-stream with it. I got the PBS pulled up here, so I'll bring it up on the screen if it's important. But last time we tried doing that, it turned out not to be important. Let's take a look at the market. We actually got a little bit of good news here today. It's been an interesting week. Oh, hi, Tam Tam. Let's see, my number one cheerleader is here. Here's what happened this week here, though. Let's take a look at the Bitcoin chart specifically. The interesting thing is, we had a really good Monday, it seemed. And then Tuesday, it gave it all back. So this was it right here. It was going all the way up to 113,000. Almost hit 114. That was Tuesday, actually. And that was by the afternoon. And then in the evening, it took a dump and went all the way back down, gave back all of its gains. And a lot of people wonder, well, what was that all about? What was the deal there? Well, we get a lot of spikes like that. Really, this kind of move right here, it's less than a 4% move, which is very typical in crypto in general. It's just like now the moves of a percent is a little over $1,000 in Bitcoin right now. So you'll see multiple thousands added and subtracted to it on the regular. This would not be unusual to see when the price was much lower, like down in the 20 or 30 thousands, and also in the 50 to 60 thousands. But now that we're above 100,000, which is very impressive that we're staying above 100,000 this whole time, the moves that you see, the spikes up like this, are far more consequential in terms of how many thousands it is. We did get up to 111,000 earlier today. Hopefully we reclaim that territory. We'll see what happens. And Ethereum is really sucking. That's it. Words cannot express just how little I think of Ethereum, or how little respect I have for the Ethereum Foundation and for Vitalik. It's like an abusive relationship to the investors. If you're investing in Ethereum, I really need to know, what are you doing? What I think is probably the best thing for everybody that holds Ethereum is to sell it. Just sell it, get rid of it. And I know that a lot of you don't want to do that, but here's what my thinking on the matter is: that if you want to get Vitalik's attention, if you want to get the Ethereum Foundation's attention, they just dumped 160 million on your heads just recently. If you want to get their attention, what you do is you drive that price down below $1,000 and watch them fall behind Binance, behind XRP, behind Solana. Oh my, it would be hilarious if it fell behind Cardano. If you guys all did that, maybe Vitalik would stop looking at the Swedish prawn or whatever it is he looks at, the Swedish corn, if you know what I mean. Maybe he'd stop looking at that and focus on what people want him to focus on, which is creating a blockchain that's built for compute. Because here's the deal, like, the reason why Ethereum is sucking so bad is because y'all allow it to. And who I'm talking about, who allows it to? I'm talking about mainstream crypto. You people like, the typical streamers out there like Rand Nooner, who gets on up here every day and sounds like Bullwinkle. Or George from Cryptos R Us, who sounds so incredibly constipated every time he talks. Or Ivan on Tech, who goes, oh, yes, we're pushing the button. Oh, yes, quantitative tightening has ended. No, it hasn't, Ivan. The quantitative tightening has ended. And, oh, you Pulsechans. I don't understand what's wrong with you Pulsechans. It's a bull market. You Pulsechans just aren't participating. Ivan, you really don't know what you're talking about. Or maybe BitBoy. I'm not sure. Can we consider him mainstream anymore? GM, guys. Man, this Ethereum thing, I don't know what to say about it anymore. Oh, man, I don't know what to say. You've been listening to any of like BitBoy's streams lately? He barely even talks. There's like these long gaps, these long spaces of him saying nothing. Because I don't know, like, has he lost his touch or was he always scripted? What the heck happened to him? So he gets on there and he wastes a whole bunch of time doing that. And then who else do we got? Oh yeah, DZ over at Piss Cover Crypto. Who goes, and we're looking at the Ethereum looking at the Ethereum price today, and it's 3,800. Man, I wonder how my NFTs are doing over on NFT Alpha. Y'all remember when that scumbag hosted a show called NFT Alpha? How are those NFTs doing? Y'all see what happened with OpenSea recently? When AWS went down? Wasn't there a guy who said that an NFT is a JPEG, or an NFT is a serial number loosely related to a JPEG that may or may not be hosted on the internet, and somebody could easily take it down and put a dick pic up there, and you would never know until you looked it up. I believe there was a guy who said that. I forget what his name was. It was like what was it? Was it Richard Spade? Richard Club? I forget what it was, man. No, it sounded like one of the playing card things. Yeah, it was either Richard Diamond, maybe. What could? Oh yes, Richard Hart. That's who it was that said that. Man, it's a good thing that we listened to him. It's a good thing you listened to him too, DZ. Right? Right? Oh, you didn't listen to him. So all that time you spent promoting NFTs. And now they're down dramatically, down 99%. I mean, they actually are down worse than Eric Wall's piss poor Bitcoin NFTs that did nothing but lose money. The Ethereum NFTs are down worse than that. That is pathetic. And this clown is the face of the what's the number one crypto channel practically. Always every single thumbnail over on Piss Cover Crypto has his stupid face on there going. Always making that same stupid face. Can't believe it. On top of that, he's a thief. But, yeah, the best thing y'all can do if you got Ethereum is sell it. Get rid of it. It's crap. And I'm thinking maybe that's why Richard moved all of the SAC funds, is that maybe Ethereum finally ticked him off, and he wanted to move it somewhere where he could easily dump it, and nobody would see. Like, that's probably why he ran him through the mixers, and then find something else to invest in. It's possibly the case there. And like, if Richard were to get rid of all of the Ethereum on in the Pulsechain treasury, I think that would seriously hurt the Ethereum price for sure. Definitely hurt it. Now, Looking at the rest of the ecosystem here, Hyperliquid is coming back. Very nice. But this is the one you want to pay attention to. World Liberty Finance, when they have a good day and a disproportionately better day than everybody else, you really want to pay attention to that, because we think that that is where all of the insiders that are closest to Trump are putting a ton of their money. So take a look here at this chart here. Look at this big spike up. Like, I'm not a fan of this project. I don't like buy into any of it, but man, look at that candle. That is incredible. Absolutely incredible. A good 14% on the day. Now, 14% probably doesn't really impress a lot of people out there, but compared to what we've seen lately, this is pretty cool compared to the last couple of days. How's everything else doing? Well, not bad. Man, these are some pretty modest gains. Like, seeing anything 4% or lower, I mean, the stock market can do that in a day, so not impressive. But hey, we'll take it. It's better than going down. Now, how about the RH ecosystem? What's going on here? Refresh. All right. Not bad, but still not great. It's kind of flat. Everything looks pretty flat here from where it was. Not impressed with anything just yet. But I'm not discouraged by anything that I see yet. Let's take a look over here at CNBS, the mainstream financial press. Any stories here worth caring about? I really don't care about the CZ pardon, because he served his time already, so what are you saving him from? But what else is going on here? Anything important? It doesn't look like anything important is happening here. A lot of people are upset about the whole Beyond Meat thing. I really don't care. A lot of people are upset about Trump's demolishing of the White House ballroom to put up another one. I really don't care. Don't care. Here's something I do care about, and you should care about it too. The DXY. It was up to 99 earlier today, so the dollar had to regain some strength. Has come back down just a little bit. Nothing to write home about. But it's something that we got to pay closer attention to here, is that it was approaching 99. I do foresee this thing going back above 100 before the year is over. And a lot of people are going to think, well, the dollar going back above 100, oh my, that means that the risk on assets are really going to suffer and it's all over. Yeah, a lot of people are going to be thinking that. A lot of people are going to be thinking that it's all over. And nothing good is ever going to happen again, right? All doom and gloom. Ooh. But here's what I got to say. I'm going to say exactly what I have said every single time. What have I been saying for the past several weeks here about Q4? Like, somebody throw in the chat here what I keep saying about Q4 for this year. I see SW, I see a question there. Don't worry, I'll answer it. But yeah, what have I been saying about Q4 this whole time? Anybody know? Let's see. Let's also check out the interest rates here. Forgot to pull those up. I think there was some changes there. I mean, what's really incredible to me, though, is that we have had the 10-year Treasury yield stay below 4% for a good couple of days. That is unheard of. It is creeping back up to 4%. We don't necessarily like that. We wanted it to go lower here. And here's the reason why. Why I want that yield to go lower is because what it's denoting when the 10-year Treasury is lower than the federal funds rate, what that denotes is that the Fed is running behind, that they're behind the 8 ball, so to speak. And they need to move a lot faster. They need to make more dramatic cuts to the interest rate, the federal funds rate. They need to move more swiftly to bringing us into an easing environment. Certainly got to stop the quantitative tightening. And they've got to possibly get the money printer going, or some version of it. I mean, I don't think they get the federal balance sheet money printer going again. I think what they do is they do something that is just as powerful as that. And that gives them the ability to say, well, we're not doing QE. We're just doing this over here. And we're like, well, that has the exact same effect as QE. Yeah, but it's not QE. Okay. While you're doing that with quantitative tightening being stopped, it may as well be QE. Yeah, but it's not officially QE. Doblarus has got it. Yes, you've been listening. You've been paying lots of attention. I've said all this time that Q4 is going to suck. We have a very difficult Q4 ahead of us. We're not even 1 month past. We haven't gotten past the first month of it or the first third of it. All right. We got another week left here in October, and we may as well call it Sucktober because that's exactly what it's been doing. It's been sucking. Maybe November will be good. I don't want to get out here and give you hope on any of that. You see, here's the thing. Like, even though I'm the big bull tard of the entire community saying, oh, yeah, the bull run never got started and it is going to come, I'm still trying to be as responsible as I can about it by telling you guys the most realistic the most realistic way to expect it, that it is going to take a long time before the money printers get turned back on. It's going to take a long time before the money printed circulates through the economy and ends up in financial assets like crypto. It could be a whole nother year, guys. It could be a whole nother year before it gets started. I know that that's not popular. That's not what everybody wants to hear. Y'all want to get me come on here and just be like, oh, yes, it's just going to go up and up and up. It's like when Sucktober is over, well, then we got Moonvember, and then December, and then we got a whole nother year of going up and up and up and up. I would love for that to be the case, but being as realistic as I can be with you guys, I don't think that is the case here. I think we got a long wait ahead of us. We won't have to wait, though, until 2028 to start reaping rewards here. We don't have to wait till after the next halving to have a good bull market. All right, and here's the deal. Like, all these people, particularly the institutional people, they all know this, that the money printers are getting turned back on. That's why they keep buying right now, even while sentiment is at an all-time low. I mean, going on X, the feed would have you believe that we're in a Great Depression all the time. But still, the institutions keep buying. I'm like, well, who are you buying? Why are you buying right now if it's supposed to be all over? And who is it that you think you're going to sell to? Because the thing is that trading is absolutely a zero-sum game. It is absolutely a zero-sum game. People think, oh, no, like the market always goes up, which over the long term, that appears to be true. But still, a trade is a zero-sum game. To even have a trade, you need two people who disagree. You need two people with opposing views. You need a buyer and a seller. The buyer thinks the thing is going to go up. The seller thinks it's going to go down. One of them is right and one of them is wrong. Time will tell. So to do this, one of them loses while one of them wins. It's not a both-win scenario. So when these institutions are buying in, they don't want to be the loser. No, they want retail to be the loser when they finally come in. So, of course, if they're getting in right now, the so-called smart money, well, they must have good reason to believe that there will be a greater fool to sell to later on down the road. And not too far down the road, though, because these institutions don't like to carry unrealized losses on their balance sheets. That does not look good for the shareholders. That does not look good as a portfolio manager to have unrealized losses. All right. A little bit of housekeeping as usual. If you want a copy of this book called Your Parents Were Wrong, Debunking and Replacing Outdated Advice, I will give you a free copy of this book. All you got to do is head on over to my Substack, which is reinventideal.substack.com. That's reinventideal.substack.com, and click right here where it says free gift, and then scroll down and subscribe right here, and I will send you a copy of this book for free. It costs you absolutely nothing to sign up to my Substack. It is 100% free to sign up for it, so you get this book without paying any costs at all. All right. So those were the main things that we like to look at day to day. Every time I do a stream here. Still waiting on the Trump announcement. Oh, wait a minute. They said the announcement today is going to be about human trafficking. Okay. Well, that's not related to a trade deal or anything. I guess since that's not related to anything, we don't have to wait around to watch that. So, some things that we do want to talk about here today. Big one, or something that I promised y'all. I promised to talk about on Tam Tam's Spaces on Tuesday was what's the relationship between Bitcoin and crude oil? What's the relationship there? Because like we all see that there's a relationship between Bitcoin and gold, and that crypto or Bitcoin itself lags what gold does by 188 days. Now, gold has a very apparent relationship with crude oil, or typically it does. Right now, it's strange. It's very out of the ordinary what's going on right now. Typically, gold and crude oil move up together because what they denote when they are going up, what that denotes is that the dollar is getting weaker. That would be a real debasement trade. Here I say, like the whole debasement trade that everybody's talking about is going on today. It's not actually happening. There's no debasement happening because, yeah, gold is going up, but oil is going down or staying flat for the most part. Kind of going different directions. That's not normal. They would usually go together. The reason gold is going up is because central banks are buying up the gold, particularly central banks in China. But what would be the relationship between Bitcoin and gold and crude oil? Well, I searched far and wide to find some information on that, and lo and behold, I did find something that can help us understand that. Originally, the theory that Bloomberg had was that if oil went up, well, then bonds and Bitcoin should benefit from that. That's what they originally thought. But as they looked closer into it, what they found is that actually there is an inverse relationship here, an absolute inverse relationship between the two. Because taking a look here at, let's see, where was the chart? It was this chart over here. We take a look at this one. I'm going to have to zoom in so y'all can see it. So the white line there, that's Bitcoin. And then the yellow line, that is the crude oil. Now, what they were thinking is that since Bitcoin mining takes up a lot of electricity, if energy costs became more expensive, Bitcoin becomes more expensive to produce. Therefore, the producers of it would charge higher prices when they are producing and then selling it. That's not really what happens. Now, also, what could happen, though, is if it becomes more expensive to produce, less of it gets produced, and so it's more scarce. And since it's more scarce, it becomes more expensive. Not quite what happens either. What happens actually is an inverse relationship. And they're not quite sure why the inverse relationship exists here, but as crude oil goes down, as you see here, well, then what happens is Bitcoin goes up. And what is really a function of the price of crude oil is the strength of the dollar, but then also the demand for it. Demand for it really declined during the pandemic. Declined real bad during the pandemic, and almost it was a great time to buy oil back then. Great time to buy gasoline too. Like we finally saw gasoline under $1 for the first time in 20 years, practically. But because the demand for it went down, it got cheaper. And then Bitcoin was going up because when oil gets cheaper, everything else gets cheaper because everything else at the grocery store costs less to get there. So that left people with more discretionary income, more disposable income that they could use for investments. And when people have more money that they can use for investments and they put it into investments, it doesn't really matter what investments they put it into. It eventually pushes money to Bitcoin and crypto. It's like I keep saying, when they print money, a chunk of it is always going to end up in financial assets, and it doesn't matter what financial assets it gets put into. Even if it gets put into the most risk-free investment out there, like a 30-day T-bill, it is going to push money further out on the risk curve, further out on the spectrum of risk. And the furthest thing out on that spectrum is Bitcoin and crypto. So just getting people to put more money into investments helps us. And that's why the 10-year treasury going down helps us as well. I mean, that's what happened on Tuesday. The 10-year treasury was going down. And what was going on there is that people were buying up the 10-year treasury, pushing its yield down. Because the yield was down, because it was lower, it was no longer satisfactory for some people that usually invest in it. So they had to go further out on the risk curve. And that pushed other investors out of other investments further out on the risk curve. And it was a domino effect that keeps pushing money out of this investment and into a riskier one, from this one to a riskier one. And eventually some money ends up in Bitcoin and crypto. That is exactly how it works. That's why we want them printing money. That's how printing money helps crypto. That is the reason why the money printer is what's responsible for the bull runs. And that's the reason why we haven't had a bull run yet. The money printers are not going off except in China. Now, we can talk a little bit about China and what's going on there because they got some pretty dire situations happening. They got a pretty dire economy problem there. Let me show you what I found here. Where was it? It wasn't here. Okay, yeah, here's what it is that the China trade exports are falling. They're down 18% year over year. Some people think it might be tariff related. But the thing about China is they spend lots of money on their infrastructure, on their manufacturing, on their investment. They invest a lot of money into building things. They are not getting a sufficient return on that investment. Just not getting it. I mean, for one, they're not being able to ship a lot of stuff out. Chinese citizen consumption is not very good for them. It's only about 37% of their GDP, which is this chart over here. They invest a lot of money, but locally, it's not what they produce is not consumed. Consumption in China is very low, which is very disheartening, I think, for a lot of investors who think, "Whoa, if China is involved in the deal, that means over 1 billion people are my potential customers." I'm like, no, it's really not how that works. Much of like what China does is they build things, they manufacture things, and they try to export it to the rest of the world because their own people don't do a lot of buying of what's created out there. It's only 37% consumption from local Chinese nationals. So, why that is there? Why is it that the locals only do 37%? Is because it's a communist country or it's a authoritarian country. They don't allow the everyday resident in China to have a lot of money, and they don't allow them to have a lot of freedom either. So, because of all that, it's a very repressed economy out there in China, and they depend very heavily on exports, particularly to the United States and Japan and Germany and the Eurozone. But now that's not working for them because their exports are going down. So, what does China do in this situation? What they could do is they could put more money into the pockets of their locals. That's one possibility. But in order to do that, they're going to have to ramp up their money printer a lot more than they're currently doing. Or what they could do is they could just increase the amount of things that they're manufacturing. But that's going to take a lot of money printing to do as well, because you need to pay for these things to get the plants up and running and to get the operations going. So the money printer out there in China is not getting turned off anytime soon. That's going to keep running. I also think that on a worldwide scale, like not just in where I say it's coming from, but also on a worldwide scale. There's going to be capital controls coming, especially in China, because they already have like their own versions of capital control. But one place that just voted on it is one that I've been talking about while nobody else in mainstream crypto is talking about it, and that is France. Check this out here. They proposed global taxation to help them with their national budget. Now, what this means here is that if you were a citizen in France at any point in time and you move away, they still have the right to come after you for taxes. A little more messy than that. But there's some more detail to it. I can't read or I can read the French, but I can't translate it for you. Assemblée nationale is to pay for their obligations. Assemblée du Trésor, or OATS, which is their version of treasury bonds. But they were proposing that if you lived at France at one point and you got a certain level of income, even if you move out of France, you're still going to have to pay taxes to France. Especially when you move somewhere that has lower taxes. They don't want you to get away with that. Now, I think that this proposal got voted down, but they are going to introduce another one. Because here's the thing, Brussels and the EU, they want to exercise austerity on France. France says, no, we don't want austerity. We want our free stuff. We want our welfare because we're all bums out here. And so Brussels is telling them, well, fine, but you're going to have to find a way to pay for it. And generally, the way that these sovereign nations come to pay for these things is they introduce capital controls like this, and then they may also confiscate foreign money. Because there's no such thing as private ownership when the country's facing sovereign default. And the majority of the money that is invested in France is foreign. And that's why there's lots of capital flight out of France right now. So it won't be long, I think, before they introduce capital controls. Because they're still losing 200 billion euros a month. You would be completely out of money in a very short amount of time. Next story we're going to talk about is my girl finally got made prime minister out there in Japan. Sanae Takaichi. And she will be getting those money printers turned back on. Right now, the 10-year Japanese bond is at roughly 1.68%. Let's see. I should check on that, actually. I'm going to look at the Japanese Treasury bond. 1.66. All right. So a little bit lower than where it was here. 1.68 was, or 1.69 was the highest that the yield had gone there. Now, why this matters here? Like, what's the deal about these Japanese bonds? Why should we care about them? If this gets above 2%, Bank of Japan's going to have to turn on the money printer to buy up a whole bunch of these bonds and take them out of the market to bring that yield back down. Because if they don't, there's a serious problem there for Japan. If they don't get the yield back down, that is going to mess up the carry trade, the Japanese yen carry trade. One very stupid guy in one of the spaces told me that there's not a lot of people doing the carry trade. Absolute bullcrap. The carry trade is used very heavily still. And that's where people borrow money from Japan to go invest here in the United States at higher rates and pocket the difference, because there's very low rates in Japan, very high rates here in the United States. So we borrow $1 million from Japan to go invest in, say, a United States Treasury bond, which is roughly 4%, and we pocket the difference. Japan really needs that carry trade to keep continuing, because that's a huge source of revenue for them in the purchase of these bonds. So if they make these bonds unattractive, if they allow them to become unattractive, they will have to print money to buy up these bonds to get that yield back down. All right. Yeah, another thing to point out here. Everybody that's saying, it's all over. Oh, crypto's never coming back. It's the 4-year cycle. Man, I think that a lot of the belief in the 4-year cycle is just because it's worked before as an explanation, and that's it. It's not because it makes any sense, because all of the 4-year fundamentalists can't tell me why the 4-year cycle exists or what causes it. None of them can tell me. I push them on the spot. I'm like, hey, can you tell me what is it that causes the cycle to happen? You say it's going to end this year. Why is it going to? Well, it always has. Okay, but why? Because it just does. Okay, but why? Because here's the reason why is liquidity. There were giant bursts of liquidity in each one of the previous cycles. Now, I also got like something else that I'm hoping that, like, first I get a 4-year fundamentalist on the program here to have a conversation with me again, and hopefully, like, this one is like more of a debate. I'm hoping I can get one of them because I got a bombshell that just rips the whole 4-year cycle argument to shreds in the most undisputable way. So much that it'd have a lot of people abandoning the idea and no longer defending it. But before I do that, I want to get a 4-year fundamentalist on here, and I don't want to shoot my best bullet, if you know what I mean. Don't want to give up the ammo just yet. Want to save it for when it's best used. I will tell everybody why it is I believe there's no 4-year cycle. There's just a cycle. But as you can see here, it's all about bursts of liquidity, and there haven't been that many bursts of liquidity. That's why this entire cycle has been so piss poor. There will be more bursts of liquidity coming. There's going to have to be if Trump wants to keep his power. Because if he doesn't give away a bunch of free goodies, if he doesn't give away a bunch of free stuff to the American people, he's not going to get the control of Congress and the Senate. They'll give it to the Democrats, and then he's going to be a lame duck for his last 2 years. He does not want that. He does not want to work with the Democrats. They tried to kill him twice. So believe me, he has zero interest in doing that. There will be a huge burst of liquidity, probably from the tariff revenue. I mean, the TGA is filled up with all that tariff revenue. He's talking about he wants to give a lot of it out to Americans. He wants to give it back to Americans, a free goodie giveaway like a stimulus. And there's lots of reason to do it just because of how horrible the job market is and how expensive everything is. Yeah, this will have some negative long-term consequences, but a big chunk of that money is going to end up in financial assets, which is going to pump our backs. And then you'll see a injection of liquidity, probably not like 2021 here, but at least like 2017. To get 2021, that's where we need official Federal Reserve balance sheet expansion, quantitative easing, which I wanted to show you this here. I noticed something about that. Where was it? It was over here, Fed balance sheet trends. Let's see. Now the 15th is still the latest date that they have up there, right? Yeah, they haven't updated it yet. It's always a week behind. This one's about 8 days behind, but check this out here. Looky here. It's actually going up. So far, it's up by $9 billion, which is not really enough to say easing is back on. But man, if that trend continues, that is a much sharper way up than it was over here in September. Like in September, we practically went up here. Well, what we had was went from 6 trillion to, we added 6 trillion there. We added $6 trillion in the whole month of September, but just 2 weeks into October, and they've added $9 trillion onto the balance sheet. Still, it's not enough to say that the trend has totally changed, because there could still be a very sharp move down of letting the balance sheet run off. I'm hoping what they're allowing to run off is those mortgage-backed securities that they never should have had on the federal balance sheet to begin with. But yeah, we'll see when that time comes. I mean, I think that there's going to be a lot of questions asked about that at the Federal Reserve announcement next Wednesday. I will be covering that live. We'll be covering that live here on Wednesday, the 29th. I think it's 2 p.m. is when Jerome Powell speaks. So that's when we'll start streaming. And it'll be interesting to see what they ask him about the quantitative easing or the quantitative tightening Fed balance sheet, because he was also asked about it last time. I can assure you he will be asked about it again. All right. Oh, by the way, here, the chances of a rate cut, they're still at just 25 basis points. Don't think that we get anything more than 25 basis points right now. It's possible we could get a 50 basis point reduction at the December meeting, but still, it's way too early to tell. And what needs to happen there is the 10-year treasury needs to go down a lot further, a lot faster. It needs to already be at like 3.2%. And then, yeah, the Fed will cut the Fed funds rate by 50 basis points in that, because the market is really telling the Fed exactly what is the right thing to do. All right. Because you see, here's the thing: it's like the interest rates, they don't really control the economy. What they do is they reflect what's going on in the economy. And when the 10-year treasury goes down, that's telling the Fed what are the growth and inflation expectations that the overall market has. And if it's down to like 3.2% or 3%, well, then the Fed is really far behind if they got the federal funds rate still at 3.75. They'd have to really cut to catch up to it. That's what's going on there. Another thing to tell you why this cycle that we're in is not like previous cycles is to take a look here at this chart. Meaning, no matter what you say, man, it was like, well, Cairo, you're wrong because you're saying this time is different. And it's never different. Nobody ever said this time is different. You're arguing that too, bro, because take a look here at this. Not really any sharp upward move in the chart when it comes to the price divided by the this model that they have here. When you look at this, it's just like, okay, we barely above 1x here. And also, here's the deal. You keep hearing the predictions from people saying, oh, Bitcoin is going to be $1 million by 2030. You hear it all the damn time from Cathie Wood, from Arthur Hayes, from Abigail Johnson over at Fidelity, from Larry Fink over at BlackRock. Yes, Bitcoin going to be $1 million by 2030. Okay, well, that's 5 years away. Pretty soon, that's going to be just 4 years away. So you're telling me Bitcoin is going to do a 10x in 5 years when it hasn't even done a 2x in 4 years. Help me out here. Still, it's better than Ethereum. I was like, when it comes to Ethereum, like if this is the end of the cycle, you guys got to realize, well, then every single altcoin or every single coin that's not Bitcoin is actually dead forever. Then, if this is the end of the cycle, all crypto x Bitcoin is dead forever. And here's why: the number one altcoin, Ethereum, only added 2% above its all-time high last cycle. After 4 years of investing in Ethereum, you only made 2% when the stock market kept going up and up and up, when boring old gold kept going up and up and up, when Bitcoin, the inferior technology, kept going up and up and up, outdated Bitcoin kept going up and up and up, and Ethereum only added 2%. Nobody is ever going to invest in crypto ever again, or at least not in altcoin ever again. Like Bitcoin is going to be all that there is, and Bitcoin will be just as like unpopular, or it'll be as popular as some pretty basic mutual funds or some sort of stock market index, and that's all it's going to be. Is that what we want? No. All right. Sunlight asks, do we have a 2008 type crisis soon? I think so. Sunlight, can you tell me what is it you think is going to be the catalyst for it? Because I got some ideas behind it. I mean, I think that already the United States is in a recession, but it's a bifurcated recession, meaning it's only happening for some people. It's not happening for it's only happening for most people. It's not happening for some of the people that have the power to keep the economy running. Because 50% of consumer spending is done by the top 10% of all earners in the economy. So it's not like, let me know what is it you think is going to be the catalyst on it. Because I'm not rooting for any big disaster to occur. But if a big disaster occurs, I think they get the money printer turned back on. So we covered this chart here already, and we covered this one. Here's the big deal here. Look at this. We're already at $38 trillion in the national debt. Oh, time to sell your Bitcoin and your crypto right now because there's no consequences of this now. Oh, no. Oh, totes my goats. Everything's going to be all right here with a $40 trillion national debt. I mean, every 2.5 months, it adds $1 trillion on. So 6 months into the year of 2026, we will be at $40 trillion. That's why I think Q3 of 2026 is when the money printers get turned back on, because that's way too much debt out there that there's just not enough investment, not enough private investment out there to buy. They're going to need the Federal Reserve to come step in. Also, like the interest rates are going to be so high that it's going to be compounding that debt a lot faster. That debt going to be compounded really fast. So they're going to need somebody to come step in, like the Federal Reserve, to buy it down. Man, I'm debating on whether I want to talk trash about this one person. There was a member of our community who said something extraordinarily stupid about this. And like, I don't know if I should call him out by name because I don't want to start the drama and I really don't like the infighting. But man, these people, these stupid people, I think if they were called out more often, they would stop saying stupid stuff. I think so. Or I would hope so. Because if I said something stupid and I got called out for it, well, I wouldn't want to say anything stupid ever again, now would I? SW asks who? I don't know if I should say. How about you guys vote? Yeah, everybody vote on this here. Let's all do a vote. See, do I got a way to do that here? I don't think I do. Yeah, I ain't got a way to put up a poll or anything in the Rumble Studio, but throw a one in the chat if you really want me to say. If there's enough people asking, well, then I'll do that. Right. Till then, I just got to learn to
control yourself.
How well are people doing that today? Here is what I should check on. Is everybody controlling themselves in the market? Where's Bitcoin at? Still 110,500. All right, looks like everybody is listening to Margaret Qualley finally. Thank you, Margaret. All right, so we talked about this chart and this chart here, and we talked about this. Here's what else we want to talk about is Ben Sierra's report. Everybody is saying, oh, Hex is dead. Pulsechain is dead. And it's all over. We just added 4,100 more hexagons in September. New hexagons here. We're so dead. I mean, y'all did see that we were in the top 5 of most traded coins on MetaMask. That does not happen by mistake. What else it says here is that 24,000 addresses interacted with Hex in the last month, with 20,000 unique addresses on Pulsechain and 6,000 on Ethereum. Active staker addresses stayed strong, 132,000 unique addresses. That's good. We want them to stay strong. We don't want any emergency unstaking going on there, unless it's from the origin address. If they emergency unstake, well, that actually would be pretty good for like the people that have active stakes going right now. All right, and we talked about this here. Okay, so the next thing here that we got to have like a really, really tough talk about. Everybody's putting a 1 in. Okay, I will do it. I'll do it later here. Well, you know what? Let's get it out of the way here. Let's get it out of the way right now, actually. Hang on, everybody. Let me pull it up. I didn't want to do this, but y'all asked me to, so y'all stayed my hands here. Let's see. Where is it? Here it is. Okay. Actually, before I do that, I think what I should do is I should start it off with this here. Because we need somebody to sing this song to him.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person, I just don't want to hear you talking anymore.
Alright, so I don't think you're a bad person, but you really shouldn't be talking about this here. That's this fella right here. I've butted heads with him in the spaces and everything. There's no reaching him, apparently. But he puts this up here. He says that, the national debt hit $38 trillion. And he says, well, that means inflation is higher, which means we are actually down more. Now, I don't know if he means specifically Pulsechain or if he means crypto in general. I'm thinking what he means is crypto in general. But, well, I'm going to ask you, you guys have been watching me long enough right here. Does anybody want to take a guess here as to why this is wrong? Because I'm sure one of you could easily articulate it. Why is this wrong?
A legitimate question, young man, deserving a legitimate...
I think one of you all might know. So I replied to him, not trying to start a war here or anything. I just say, hey, read this and read this, particularly this one here. This is from Lynn Alden. And what she has written about here is what's called fiscal dominance. And you got two kinds of money policies from the government. The Federal Reserve does monetary policy, and the federal government does fiscal policy. Monetary policy, you know what that is. That's the Fed deciding what are the interest rates for the economy, what's the money supply with quantitative easing and tightening. Monetary dominance would be like what we had in the 80s and the late 70s when Volcker came in and was really punishing the politicians with those high interest rates that he put on. That's monetary dominance, where the Fed is telling the Federal Reserve is telling the federal government, no, you will not go crazy with America's checkbook or America's credit card. You will not rack up an insane national debt. You will be financially responsible. And the way that they do that is by being very hawkish, by raising interest rates and doing quantitative tightening. They didn't do quantitative tightening back then because they didn't have a lot on the balance sheet back then. But they really raised interest rates. They were double-digit interest rates. So that would be monetary dominance. That no longer exists. I mean, you keep hearing it over and over again. Like, why is the Fed cutting rates when inflation is still high? And when the stock market is at an all-time high, when gold is at an all-time high, when Bitcoin is at an all-time high, why are they cutting rates? Because of fiscal dominance. It's gotten to a point now where the federal government is now telling the Federal Reserve, son, sit back down. You don't tell me what we're gonna and not gonna do. We're in charge here. Because we're the ones that gave you all the power that you have through the Federal Reserve Act. That all comes from the federal government. So you people over at the Federal Reserve, you will reduce interest rates so that we can do the crazy spending that we want to do in the big, beautiful bill. So that we can rack up the national debt without causing a death spiral, because you're going to lower interest rates, and you're even going to buy up some of these bonds. You're going to do what we say, because fiscal dominance means the federal government is in charge. That's what I was trying to get through to him. He didn't even look at it, I'm sure. He didn't reply. So if he means that this is going to cause crypto to go down, he just doesn't understand. He just doesn't understand how it works here. I mean, sir, if you really think that that is how it works, well, then I think you need to go to FINRA and file a complaint with them on every single financial advisor for violating their fiduciary duty Because inflation is the reason every financial advisor tells every client they have why they need to invest in financial assets so you can outpace inflation. If there was no inflation, we'd have no reason to invest. We could just stick our money in the bank and just save. We could just save a pile under our mattress or in a coffee can buried in the backyard. We wouldn't even need to invest if there wasn't any inflation. But because we have inflation, that's the whole reason why you need to invest. And yes, I know that you've heard these stories multiple times where every time inflation gets reported, well, the Fed is going to be hawkish and not want to cut rates. Those days are gone. That's why they're cutting rates right now, because of fiscal dominance. Also, who do you think is going to buy up all of this debt? Where do you think they're going to get this $38 trillion from? Because you see, the reason why the national debt keeps growing up, keeps getting higher and higher, the reason why is because they never pay it down. All they do is they just roll it over. When a bond matures, they issue another bond to replace it. They issue new bonds to pay back the old bonds and pay back the interest on the old bonds. And then they got to issue new bonds to pay back the interest on the new bonds that they issued. So SW says China, which is true. China buys some of our bonds. They don't buy 38 trillion. They're not going to buy 40 trillion of it. In fact, I think they only buy like less than $1 trillion. Let's look that up here. Man, why do they do this on? I really hate this browser, how it always puts me on Yahoo. I've tried a gazillion times to switch it to Google, and every time I close it out, they switch it right back. How much of our national debt? Yeah, let's do ode to China. Not even $1 trillion. 784 billion goes to China. All right, and after China is Japan. I think both of those countries are actually trying to reduce the treasury exposure that they have. I think what they're doing is they want to rely more on gold. That's why their central banks are buying up gold. They'd rather have gold as opposed to U.S. treasuries. It used to be they wanted treasuries. Now they want gold. Oh, where'd the chicken song come from? It was a TikTok, actually. The one that RH Max made was this one here.
Sometimes you just gotta shut the FUD up.
This one here.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person. I just don't want to hear you talking anymore.
That one was a TikTok. I forget who created it, but I saw it on TikTok there. So, when I point this out here, now we live in an era of fiscal dominance, so whenever the national debt rises, they're going to force the Federal Reserve to accommodate the federal government with more dovish interest rate policy. I posit that to them, I show them the proof of it and everything, and here's what I hear in return. Just like from all the four-year fundamentalists. All right, so we do a quick service announcement right here, and then we got to get into a very difficult story to talk about that it may have caused you to worry. It may have caused you to worry earlier in this week. I'm going to tell you about it. You don't necessarily need to be worried, but you do need to conduct your affairs with a lot more prudence. We'll get right back into that here. But first, take a look at this.
Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave. before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right. Now, that book, the whole purpose of it is for you to be able to explain to your friends when they ask you the tough questions about, well, hey, you know that crypto thing that you do? How is it that it goes up all the time and goes up as much as it does? Like, what is really the cause of it? What's really making that happen? Can you explain that to me? And the 4-year fundamentalists are just going to say, oh, it's just because it's the 4th year is all. And then they're going to ask another question. They'll be like, okay, well, why is it then that it happens every 4 years? And why must it happen every 4 years? I mean, doesn't everybody kind of like catch on to it? Doesn't it become so predictable that everybody tries to front run it and just everybody trying to front run it? Wouldn't that knock it off of its 4-year schedule? And the 4-year fundamentalists just go, because they ain't got no answer for that. Or no, you know what their answer is? This is their answer for it. All right. So that book is there for you to be able to explain to your friends why it goes up. All right, Daniel, I see your question. I will answer it. Here's what we got to talk about, guys. Kadena was a crypto it's an L1 that has failed recently. Not in the sense that like it's being shut down or anything. It's just that the team behind it is abandoning the project and they're trying to turn it all over to the community. SW, yes, it is available in paperback on Amazon. Now, why are people scared here about this? Because when we look at it, it just went from, 20 cents to 6 cents? I mean, that happens on a Tuesday. And here's the reason why. Take a look at the all-time here. This is a second cycle coin, and it had a really good run back in 2021. This thing got all the way up to, $22.74. And it looked like a very formidable L1. Had a very good story to tell. And it had its first pop with Bitcoin in May of 2021. Then its final pop, November 13th, 2021, where it reached the all-time high. Goes down with the bear market, as you would expect. And then goes way, way down from $1 all the way down to like 20 cents. And then it falls right off a cliff. And so a lot of people worry about this because they're like, well, other altcoins I invest in kind of have that exact same life experience. The charts for other altcoins I'm invested in look just like this. Do I need to worry about them getting rugged or them getting abandoned and to crumble? And I say yes and no. Because we really want to get into, like, what is it that is causing, that caused this to happen? What was it that was responsible for the fall of Kadena? I looked into it here to be able to provide that answer to you. And here's what I found. I mean, for one, this is a proof of work blockchain. Is proof of work still popular? No, not really. I mean, for one thing, it was always meant to be proof of work, and it was meant to be a rival to Ethereum. But Ethereum, while it was proof of work back then, they were still working on switching to proof of stake. Remember the story from 2022 that they just wouldn't stop talking about? They called it the merge, or they called it the triple halvening, which it was a whole bunch of hype where they were saying, oh, yes, there's going to be an event that's like a triple halvening in Ethereum, and it should have a triple halvening effect on the price. All it was just Ethereum switching from proof of work to proof of stake. That's it. So Ethereum makes that switch because proof of stake is just a better system. But Kadena, they didn't want to change with them. They wanted to stay proof of work. So figuratively, this blockchain has failed on, it was October 21st was when this happened here. because the Kadena Foundation announced that they were ceasing all business operations and all active network maintenance. Now, here's what I got to say about that. Is like, if you need a foundation behind the chain to be doing active network maintenance, you're not crypto. At least not in the way that we understand it. So this was founded in 2016, actually, from somebody that used to work for J.P. Morgan. The guys' names were Stuart Popejoy and Will Martino. They raised a lot of money in the original funding, and at one point they had a $25 billion market cap at the peak of the 2021 bull market. And actually, like the wick that it went all the way up to was $27.64. That's how it wicked up. It's just it closed at $22.70 on the day. Now, here's what else was like the selling point of it is that they called it a braided multi-chain architecture and a packed smart contract. Technically, the thing remains operational as a decentralized proof of work network. It's just like all the miners behind it, they're all independent, as they should be. And they can continue earning rewards. I mean, there's still 566 million left of this token that can be mined up until 2139. That's what I think at the end of the line with the mining. There's about 83 million still left to be unlocked up until 2029. The token unlocks is a big problem for it here. We got to be very weary of token unlocks and also what they call SAFTs, S-A-F-T. We got to be very weary of those here. I'll explain what those are. But the last thing that's going to be done here with us is like the core team is going to provide a final software update. They're going to try to transition it to community-led governance. But without centralized development, without partnerships, without upgrades, it doesn't look like this ecosystem is going to have a future. And when I hear that, I'm just like, well, if that's what you need to operate, I don't think you understood what crypto is all about. Now, they've already delisted them on Bybit and on OKX. The TVL on it has dwindled from 9 million to 170,000. It's pretty bad. Now, what they blame it on is the bear market. They're saying that, well, these ongoing bearish trends, the high interest rates, and less appetite from VCs to invest in L1s has really starved us here. And there's still more that they could have done. I mean, for one, there was no audited financials. There was no contingency plans. There wasn't much of a treasury runway, even though they had 268 million raised. They say it bled out in silence from starvation. I think really it was a lack of planning on their part. There was a lack of adoption as well. I mean, what they wanted to do was they wanted to be like a very scalable L1 that was doing like 480,000 transactions per second. That was what the hope was going to be. But I think that what they didn't take into account is the costs available in that. And then also as a proof of work chain, you also got to bear in mind that there's external costs, not just like in the gas fees to transact on the chain, but the real big problem is also there's external costs, negative externalities, as Richard says, is that there's energy costs to run the equipment. And also, when you do a proof of work chain, the miners have to buy the expensive mining equipment, like a Kryptonite just said right there. I mean, mining is hard work for no money. There's a lot of initial upfront investment, and a lot of people think, well, that investment denotes conviction in the project. I mean, what's going around right now, you're probably seeing it on X, is everybody's posting about how the Bitcoin hash rate is higher than ever. And that's bullish for the price, which, depending on how you look at it, could be true. Because what that hash rate shows is like a lot of expense is going into mining the Bitcoin. And if people are spending a lot of money to mine the Bitcoin, that shows a lot of conviction in the price. I think like the mining cost for a Bitcoin is 108,000, which is kind of why the price is staying right around there. But when you look at a proof of work chain, like say Caspa, you got to pay like $8,000 just to get a miner. That's just for the equipment. Then you got ongoing costs to continue mining it. There's lots of energy costs. So proof of work, I think, is going to be going away. I mean, or you're only going to have like a small handful of proof of work coins. Just Bitcoin, maybe Caspa, if they manage to stick around past this cycle. We'll see. But I don't foresee proof of work being a thing very long after. There was a lot of competition that this L1 faced from the proof of stake chains, particularly Solana, and then also Ethereum when they switched to it. I think what the two things that really killed them, and this is why I say us and Pulsechain, some of the other L1s, we got nothing to worry about. What really killed them was this here. The project's fate really hinged on the Foundation's ability to promote it and keep it up, and it really exposed a lot of fragility. Basically, it had a centralized dependency on the Foundation. There wasn't a lot of building on the chain from people that were independent of the Foundation. So, like over in Pulsechain, there's lots of projects that were launched that Richard had absolutely nothing to do with. And those projects are still going. Over here on Kadena, they had nothing like that. Here's what really killed it, though. A heavy reliance on the SAFTs. And that's allocations that come later that create dilution. What an SAFT allocation is it's a simple agreement for future tokens. That's what it stands for. Simple agreement for future tokens. That's a funding mechanism that's used by a lot of blockchain projects like Kadena to raise capital from investors. You can kind of think of it as like the sacrifice phase that we did over here in Pulsechain, but a little different. Because you see, typically these are aimed at venture capitalists or accredited investors, as opposed to the everyday investor in the community. So before the tokens are issued and the network goes live, they're creating these agreements with these venture capitalists, and that's SAFT. And they say, well, you give us this amount of money, we'll give you these tokens. It's kind of like an ICO or a pre-sale. But the agreements, they allow the project to raise funds for development, for marketing, for hype. But these things also become a liability, especially when the market turns sour. Because you see, the structure of it is like it's a contract where investors are providing funds to a project in exchange for the right to receive the tokens at a later date. Not right at the launch of the chain like we had in Pulsechain, but at a later date, there's an unlocked schedule. And because that unlocked schedule changes the amount of tokens in circulating supply and dilutes them, that causes problems and disgruntles a lot of the current holders. Because something that is really angering a lot of the SUI holders right now is the token unlocks, which just means, well, they're giving away more tokens that weren't circulating to early investors. Now, the purpose of this here is that it allows them to raise capital without having to immediately issue tokens. So that sidesteps a lot of the regulatory headaches that you would go through, like especially back then when we had a very unfriendly SEC that didn't want us doing anything like this. All right. You might know that Sonic, the blockchain Sonic, when they were going from Phantom to Sonic, they didn't do anything like this, and they waited like right up until January to launch the chain. It was really kind of like mid-December when they did that. They waited right up until then to do that because they wanted to know for sure that Gensler was on his way out at the SEC, because Gensler's SEC was actually really bullying Sonic as much as it was bullying Pulsechain. That's kind of where Andre Cronje disappeared for a while, because he was a big deal over on Phantom up until the year 2022. He was getting very threatening, nasty letters from the SEC. I think it was a Wells notice. They didn't want to fight it, so Phantom, that whole ecosystem, the Phantom Foundation, they decided, well, we're just going to lay low. And then if Gary leaves, and we know that like Trump is going to have a friendlier SEC, that's when we'll launch the Sonic Labs and convert everything to that. All right. So they didn't have to go through the pain that we went through here in Pulsechain because they decided, well, we're just going to lay low till then. All right. But this SAFT was a huge problem for Kadena because the allocations were enormous allocations to the early investors. And with VCs, they're a lot like private equity, where all they want is their money back. They just want a return on the investment, get their money back so they can go invest in the next thing. This is why you want to be very glad that there's no VCs in Pulsechain. You want to be very happy that there ain't no VCs in it. Because those investors, they don't stand and fight. They don't endure horrific bull markets. They cut and run at the first chance they get. And that was definitely the case here with Kadena, because like as the tokens vested, and they got dumped onto the market during a lot of like the bear times throughout this year, 2025, the TVL really plummeted. When KDA started trading below 10% after like a 99% drop from its $27 peak, many early investors were thinking, oh my gosh, 4 years later, we're down 99%, kind of like how we are in Hex. These were VC investors. They don't put up with that. They dumped their tokens and they ran. So it was basically infinite pain. Like, if you're ever feeling bad about what's going on in Hex, just take a look here at Kadena and take a look at GameFi too, because it's equally as bad. There wasn't a lot of demand to absorb the supply that was being dumped on the markets. You see, Ethereum, Solana, they could do a lot of token unlocks, and Sui as well. They can afford their token unlocks because there is enough demand on the market to absorb those. But the robust ecosystems that you see in like Ethereum and Solana with the DeFi going on, the staking, even stupid stuff like NFTs, there's a lot going on there to absorb the supply, even if it's just through gas fee burns. But Kadena didn't have a lot of adoption. There wasn't any organic demand to counterbalance those unlocks. And the community sentiment on X was basically just calling it a ghost chain. There was also kind of a trap that the SAFT does on them. It just means there's constant sell pressure from the unlocks. And without a vibrant ecosystem to create any sort of demand there, well, they see that mirrors a lot of other supposed Ethereum killers. You don't really hear about Ethereum killers anymore because EOS and IOTA were kind of had the same problem here, where like token dumps outpaced the adoption. Now, an SAFT isn't inherently bad. I mean, they have funded successes in Ethereum. Chainlink did some SAFTs. It's a big risk that a chain is taking on. When a chain successfully navigates that risk, when the project overcomes it, well, you don't really hear too much about it being a problem. But it can be an enormous problem. Right? Kind of like the Achilles heel in crypto here, where you have a project with a promising future, and then dilution starts to occur when those unlocked tokens finally hit the streets. The mechanics are just pretty straightforward. Yeah, we got a vesting schedule, which means you got to wait a certain period of time to get the tokens that you were promised when you originally invested money into it. And it's a predictable schedule, so people should know, they should see it coming and everything. That doesn't mean that they prepare for it accordingly, though. So what other projects have SAFTs? What other projects could have this problem? I'll tell you. I'm not saying don't buy these projects. I'm not saying that this is something to worry about. I'm not saying that these projects are trash because they have SAFTs. What I'm saying is, now that you know what SAFTs are, be aware that these projects have them and look into when the token unlocks occur. I think they show it to you on CoinGecko. So even though like most of what we talk about here are the RH assets, there are some other coins here that have this problem. Sui is one of them. They have been able to navigate it pretty well because token unlocks from the circulating supply is about $270 million worth from as of October 2025. That's about 2-3%. About 2-3% here. Matter of fact, let's look at that on Sui because I know that that's like very popular for a lot of the crypto market. Does it tell us here on Coin Market Cap? Where does it say? Okay, circulating supply is at 3.6 bill, and it's 10 billion total SUI. So right now, like 30% of the supply is. Oh, here we go. Token unlocks. It's right here. Excellent. All right. So here they show you exactly who they're going to give it to. Oh my. About 50% of it's still yet to be released here. It won't be released until after the year 2030. Not really a problem right now. 36% of SUI is unlocked and given out. If you're going to invest in this, what you better hope is that there's going to be a lot more people piling into this before 2030 because more than half of the coin is being released, is still locked up here. More than half of the supply is still locked up. Now, we kind of got a little bit of that going on here in Pulsechain because so much of the hex is owned by the origin address and so much of it is staked. It's staked out for 15 years. And if it gets emergency unstaked, half of it will go back to the origin address and the other half will get rewarded to the other stakers. Stakers typically are not people that dump this stuff on the market, because if they did, they wouldn't be staking in the first place. So we got a lot of reassurances with the like the game theory that went behind like the hex staking mechanism. All right, so SUI is one of them to not necessarily worry about, but to be wary of, or to be aware of, is what I'm saying. Another one is Aptos. Let's take a look at them here. Aptos. Let's see if they tell us the unlocks on here. I think all of these are layer 1s, by the way. Yep, they tell us that one here. So what's this one say? Well, this one's less bad. Less of a locking problem. Because about 45% of it is already unlocked. About 38% is still yet to be unlocked. And then there's 15% where it's not tracked. Nobody really knows what's going on with that. Wonder what's happening there. The next one after Aptos is Arbitrum, which I never really thought that much of. That's an L2, actually. The reason why I never really cared much for Arbitrum is because the Bankless boys promoted it all the time. Let's see. Got 48% unlocked, 18% locked, and 33% untracked. That whole 33% that nobody knows what's going on with it there is make me not want to screw around with it. And let's take a look at this here also, this allocation. 40% of the coin is going to be allocated to the team, the future team, and advisors. I mean, when you look at it like this here, it says future team or team. You kind of think of it as like stock options, like when a company rewards its employees with stock options or its executives with it. That's kind of what this 40% is set aside for. Isn't it great that in Pulsechain we don't have that kind of crap going on? Isn't it great to not have to worry about this in Pulsechain? I think it is great. All right, so Arbitrum was another one. Optimism, which is another one I didn't really care for because I think I heard Bankless boys promoting it. What has me so upset about the Bankless boys is not that because of all the shade that they throw at us. What has me so upset at them right now, why I'm so not a fan of them, is because multiple times they have had Vitalik on. They had him on recently, and they didn't think to ask him, hey, yo, Vitalik, why is the Ethereum Foundation constantly dumping Ethereum? If you guys don't believe in your coin, Why should anyone else? Like, if I had the opportunity to interview Vitalik, that's the first question I would ask him, all right? I'd be like, hey, asshole, what the heck is going on? Do you not care about your investors? No, I'd have to say it a lot nicer than that. I don't think I could. I don't think I could say it a lot nicer than that. Yeah, because somebody would have to. Somebody would have to jump in every now and then and tell me that I need to.
Control yourself!
Because I got like so little respect for Vitalik and the Ethereum Foundation, all those people. So little respect for them. Now, optimism, this doesn't look too bad right here. It only got 5% locked, but what's frightening is 43% is untracked. Why is that? How about Solana? Like, that's probably one that more people care about is Solana. Do they tell us here? They don't tell us. That's all right. We know that they got some that are still yet to be unlocked. Another one that I talk about a lot is Athena. Let's look at them. All right. All right, so more than half is still locked up in Athena. I don't particularly like that. But what I do like is that there isn't a big chunk of it that's untracked. And still, when we look at like the distribution of it over here, it's pretty well rounded. Pretty well rounded to it here as far as like who that's all going to be distributed to. So I don't like that more than half of it is locked up, but it could be much worse. And when we take a look here at the holders, what do they tell us? There's 80,000 holders, and almost 60% is in the top 10 wallets. That's true of most coins out there. It's true of most coins out there. You do got to be very careful with Athena. Check one more here, just because like I mentioned them earlier. Has they got anything like this for Sonic? Because if they do, we should be aware of it. No, they don't tell us anything about it. Okay. So, some things that we want to be aware of, like some key patterns and mitigations, is that, well, you find a lot of L1s will have this, and also a lot of L2s will have this, because they're prioritizing growth over immediate circulation. Newer coins that come out right now will be especially vulnerable to this because a lot of them are doing SAFTs. Meme coins like Trump, they will have a lot of this as well. This is kind of like why those meme coins like the Trump token wipes out billions in just a day. It's because of the unlocks that go through. The dilution is very powerful in these. Like a 5% jump in supply can actually tank the price anywhere between 10 and 20% if there's a lot of trading going on here, like if you have a trading spike without demand. Sui had this happen once. Like there was an 11% downward action on the price because of an unlock. It's not all bad though, because some of these projects that have unlocks, they also have coin burns going on to try to offset it. Now, I will say here about coin burns, I'm a lot more weary of those because coin burns have not always been positive for the price. You would think that they would be, like they're reducing the supply. It's not always been very good for the price here because you see, the deal is that if you're relying on a coin burn to support your price, that kind of communicates to the market that you don't have anything else good going on with your coin. That you have to cheat in order to you have to like sort of cheat in order to make the price of your coin go up, or you got to tamper with the supply. Not necessarily cheating, but tampering with the supply. So I'm weary of those. Like the one incident that I'll never forget is Spell Token. Let's pull that up here so we can have a good laugh. The reason why we're going to have a good laugh is because one of the biggest haters of Hex and Richard Hart everything one of the biggest haters promoted this coin on December 26th of 2021, saying that there was going to be a coin burn the very next day, and that's going to cause the price to go up, which it did. It went up a little bit there on the 27th. It was already up pretty high. It was at like 2 cents. So it went up to 2.6 cents. What happened immediately after? It was only up on the 27th, crashed all the way down. Crashed all the way down hard. 99% from its all-time high. And it has never recovered. It is now 0003486. It's funny to me because this putz is constantly talking trash about Hex when he shilled this coin the day before it crumbled. And if you ask him about it, he gets a little antsy and doesn't want to talk about it. And one time he was on his stream going, "Oh, how's the price of Hex doing?" And so I threw into the chat there, "How's the price of Spell Token doing?" And then immediately I got banned from his chat. All right. So, coin burns, don't put a lot of faith into them. They're not that great for the price here. So here's how you can avoid a lot of this crap. How you can avoid a lot of this is you want to look at how much of a treasury the coins have. How much of a treasury does the project have? Because that gives it a lot of runway. We had one to look at with the Pulsechain SAC wallet. That was basically our treasury, the Pulsechain treasury, where we had 160 million Ethereum, or 160 million in Ethereum, and that gives us a pretty long runway for the health of the chain. Sonic, in particular, but back when they were Phantom, they had what they claimed was a 30-year runway. They could keep it running for 30 years because they saved so much money back when it was Phantom. Now we know that they got at least 250 million, which could be 10 years or so. We don't know exactly because they don't. They're not as public about it as they used to be. But Foundation controls enough of the supply to reward the stakers out there, and then also with a lot of the burns. They have enough to have at least a 10-year runway. Algorand, their treasury would last them anywhere between 4 and 6 years. I know Algorand's got a lot of people have concerns about them because they did a lot of SAFTs. Filecoin is 5 to 7 years. Ondo Finance, about 6 to 8 years is how long their treasury would last them. Pulsechain, we don't really know because we don't have the treasury to look at anymore. And I think a lot of it, like Richard did what he did there, is because he doesn't want people watching the wallet and speculating on what to do with it. And if people know how much it's got, they're going to constantly complain, "Richard, why don't you pump the chain?" And it could also be that he's done with Ethereum and he wants to ditch it all, which, hey, that's what I would do if I was him. The Graph has about 3 years. Render, 3 to 4 years. Root Network, they've been beaten up pretty bad, but they got 1 to 2 years in them. Pith Network got 2 to 3 years left in them on their runway. So it's important to know for all the coins that you have, what is the treasury runway that they have? How long can they last if they only lived off of their treasury? Enough of that here. Let's have a look at all of our questions before we wrap up for the day. Get them all in right now, guys. SW asks, do you think a 50 basis point move is likely next week? I don't think so. I mean, we'd see that priced in on the CME predictor tool. And like really where you need to see it is you need to see the 10-year treasury move down a lot further. You need to see that 10-year treasury move down below 3.5%, because that tells the Fed, hey, you guys are really far behind. And you need to really ramp up the rate cutting. And damn it. Gosh darn it, guys. Look what just happened. The 10-year treasury is back above 4%. Or is back at 4%. So when this happens here, it also means the dollar's getting stronger, right? Yeah. And I imagine that's probably pushing Bitcoin down, right? You know, it's right at 110,000. Not quite down. So what you need to have happen is you need that 10-year treasury to be down below 3.5% for them to cut a full 50 basis points next week. Here's something I really want to look at is Bitcoin dominance. I'm paying very close attention to it. It has been going up. We do want that to go up because when Bitcoin dominance goes up, this goes above 60%. That means people think, well, okay, well, Bitcoin is back in play and it could post a new all-time high. We want it to post a new all-time high so people think they can make all of the money they're going to make out of Bitcoin. And especially if it does like a new MVRV Z-score, which is just a market value to a realized value. If it posts a new Z-score there, well, people think, okay, Bitcoin season's over with. Now it's time for Ethereum and then time for alt season. We do want that to happen. Because you take a look at the previous bull markets. Like, this is why I know it hasn't started yet. There has to be a crossover between the Bitcoin dominance and the other coins ex Ethereum. Here it was in alt season of 2018. Here it was in they didn't really cross over, but they touched throughout the 2021 bull market. And then the alt season that kind of continued into 2022, they crossed over there. So it ain't happened yet, but it will. All right. Oh, hey, RH Max. Didn't notice you were in here. Hey, RH Max. Yep. Sunlight asks, you mean bail-ins are coming to France? Well, here's what I see happening with France here is they introduce capital controls. That will tick a lot of people off because there is a lot of capital flight going on in France. And if you can't do your capital flight, you can't save your money, what's an attractive investment? Is there a form of borderless money out there? Well, yes, there is. Bitcoin. Makes Bitcoin more attractive. But when the capital controls ultimately fail, or they don't raise enough money, France is going to have to go to the EU. They're going to have to go to Brussels and ask for the money printer to get turned on at the ECB. And the Brussels may do it. If they don't do it, well, then France secedes. And if France secedes from the EU, which they could easily do because Brussels is very unpopular, Ursula von der Leyen is one of the most unpopular politicians out there. If France secedes from the EU, well, then the whole Eurozone collapses because they depend so heavily on France. They make up such a big chunk of it. So they're too big to bail out. They're too big to fail, but they're also too big to bail. All right. What else do we got here? Presidential cycle, SW, could be tied to the Bitcoin cycle in this sense that if they do not get what they want with the Federal Reserve Board of Governors before the midterms, then that could be the end of the cycle for a while because they can't get Lisa Cook replaced with another Stephen Mirren. That's a huge problem for us. It's a huge problem because if that happens, she's stuck there. Or I suppose like they get rid of her, but they can't get rid of her until after the midterms. Suppose the Democrats are taking over House and Senate. They're not going to confirm anyone that Trump appoints. They will not confirm. They will hold. They will stand against. They will stand against him until he puts an hawk on the board. And then it could be over till the next cycle. Hopefully that doesn't happen, though. I mean, really, in an era of fiscal dominance, We don't really have to worry too much about that because the Fed is kind of playing ball with us here the way we want with cutting rates. And also, if a disaster occurs, they turn the money printer on no matter who the president is. Right. Tob LaRousse has got a really good comment here. It says, people who want the 4-year cycle to be real do that because they told their onboards that that's how it works. So they're worried they will look stupid when it doesn't happen this Q4. See, if I was one of those onboards, I'd be asking, well, why does it have to end in Q4 of the 4th year? Why? And I don't think that they would be able to answer that. See, Sunlight asks, do we have a 2008 crisis soon? The debt crisis closing in. Yeah, it could be that. I think the real problem that could be a bigger one than they're expecting is the private debt crisis, the private credit crumbling. Because Tricolor was just a beginning. Now they're finding a bunch of other companies just like it that are going bankrupt as well. All right. When does all this debt have to be refinanced? Asks SW. It comes in waves. There was about 10 trillion that needed to be refinanced this year. Still a couple trillion left to refinance and roll over. And then there's 7 trillion next year that has to be refinanced. So they refinance 7 trillion next year. They're also probably going to add another. Much more they add? Probably another 7 trillion at least on top of it, which is quite a compounded amount of debt. Money printer is the only thing that makes that manageable. All right. Let's see. What are questions we got here? I know there's some more that came in. JP Morgan said the Fed will end QT next week, asks Daniel Liu. I did see that. And Jamie Dimon, if he was the one that said that, he has a good source telling him that. And I think that they're going to ask Jerome Powell about quantitative easing at the Fed press conference next week. They'll definitely ask him about it, or quantitative tightening, or the Fed balance sheet. And we'll get some comments on it there. I will be covering that live next week on the 29th. So we will see what they got to say. I do think that, they'll certainly ask him about it. Hopefully he says, oh yeah, that whole QT thing, we're done with that. And who knows? Maybe they say something else about quantitative easing. Kryptonite asks, how relevant is their code these days? Is it better or different? Were you asking about Kadena? What are you asking about? Don't know who you're asking about there. All right. That's all the questions that we got for today here, it seems. All right. So, again, I want to end it here with this, because I know that sentiment is very bad for a lot of people out there. And there's lots of anger out there, too, which I totally understand, because you got in probably at the bottom of last cycle, and believe me, look at this year. This year looks so flat. So you'd believed that if you stayed put, stayed strong, did what was the right thing to do, you'd be rich by now. And then you look at this chart here, where like, hey, the lowest the market cap got in, let's see, the bear market bottom was 800, or it got a little bit lower. It got to, 798 billion. So less than a trillion. And you're telling me that all it's going to do is just, at best, do a 4x, right? A little over a 4x there. That doesn't seem right, especially when the majority of that is all in Bitcoin. And the majority of what's going into Bitcoin is all ETFs. And a lot of people look at like this nasty downtrend here and think, oh man, it's all over. Especially with gold going down too. I was like, probably people are looking at this and going, Bitcoin was going up and gold was going up. That tells me the whole debasement trade was a myth. There was no debasement, which is true. There was no debasement yet. But here's why I say don't be discouraged. I got a million things that I've said 1,000 times already. I'm going to say something new here today. Let's take a look here at these ETF inflows. All right. So far in the month, it's out 112 million. But over the last 3 months, it's actually up 226. But here's what's encouraging to me. When we take a look at the outflows for the past few days here, like starting on the 12th, there's 326 million. Here's 100. So we're at 400 mil. Now we're at about 900 mil. We'll round it up to 1 billion. 1 billion out. 1.36 billion out. We can go ahead and make it 1.4 billion out. Now 1.5 billion. So 1.5 billion has left the the crypto ETFs, the Bitcoin ETFs. Now compare that though to how much money has been plowed into them in the last 30 days altogether. Here's a $500 million. Here's roughly another $500 million. Here's 675 mil. All right, so we're already at like a little over 2 billion right here. Here's another billion. Here's another billion. So there's 4 billion right there, and we're still counting. Almost 5 billion here. Okay, we'll round all this to 5 billion right here. And then another $500 million right here. So 5.5 billion has been plowed into it in the past 30 days, and only 1.5 billion has been moved out of it in the last week. So you're telling me that we're worried about making 5.5 bill when we lost only 1.5 billion. I mean, those are actually good. That's good business returns right there. If I told you, hey, there's this business that is going to cost 1.5 billion to start, but you will make 5.5 billion on it in return, that sounds like a pretty good business, right? So this is what I say. Yeah, this isn't the start of a bearish trend here or anything, because still the amount of money that got plowed into it this month is much greater than the amount of money that was subtracted out of it. Just looking at the ETF flows. And looking at the ETF flows, I think, is a better measurement of how the thing is doing, because the most emotional people are the TradFi people. Or they're the ones that don't know what we know. So they're probably the most low information investors. And specifically the ETFs here. Because like when these ETFs, it's the clients that are buying these. It's not the smart money so much that are buying these. Also, when you look at the Bitcoin treasuries, this is the smart money. They own 5% of the supply of Bitcoin. The amount of companies, I mean, there's about 200 of them on this list here. The amount of companies that are going to add Bitcoin to their balance sheet is expected to double in the next 12 months. But wait, don't they know that it's all over? Why would companies want to start adding Bitcoin to their balance sheet right now? Because it ain't all over. All right, people just believed in the 4-year cycle because it worked as an explanation before, but nobody really understood why it worked, and nobody was ever able to make sense of it or anything. It's all just a matter of, it worked that time. Okay, well, why is it going to work this time? That's not really an answer. Can you tell me, why is it going to work this time? And that's all I hear. Especially with like the setup that we got coming in here, guys. I say, we got nothing to worry about. Y'all just hang strong. Let's get through Q4. It is going to suck. But I think Q3 of 2026, everything's going to look a lot better than it does now. And that's all I got to say for today.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up.